Hi, today we are going to talk about finance fundamentals, an overview, a picture of the finance. This particular topic is very important to discuss. So let's talk about this finance, the role of finance function, how it works. So when we talk about the role of finance, it is very important to understand that the finance function plays a pivotal role in formulating corporate strategies, ensuring fiscal compliance, managing risk, and optimizing profitability. It governs internal controls and allocates resources to maximize shareholder value. For example, Apple Inc. that utilizes its finance division to maintain tight cost control while investing billions in innovation, maintaining a position as a technology leader with significant liquidity and minimal debt. So let's move on and talk about the financial planning and pro forma statements. What are those? Um, Financial planning and pro forma, when we talk about it means that financial planning provides a blueprint for a company's future, outlining revenue targets, expense forecast, and capital needs. Pro forma financial statements simulate future performance under varying assumptions. Say, for example, Tesla, for instance, uses forward looking financial models to plan funding rounds for new gigafactories, aligning financial capacity with operational scaling and global expansion into EV and energy markets. And our next talk will be related to the financial statement preparation and analysis. Financial statements provide stakeholders with a transparent view of financial performance by preparing and interpreting income statements, balance sheets, and cash flow statements. Companies assess their health. Amazon employees comprehensive financial analysis, leveraging performance metrics like gross margin and free cash flow to sustain rapid growth, manage logistics expansion, and evaluate business segment profitability across international markets. So the next slide, I will talk about my next topic would be the time value of the money. So this is very important to understand that the time value of money asserts that a dollar today holds greater value than the same dollar in the future due to its potential earning capacity. Financial institutions like Goldman Sachs um, rely on discounting techniques to evaluate bond investments, loan structures, and derivatives pricing, ensuring capital is allocated to projects that yield the highest present value in volatile markets. So next we will talk about capital investment decisions, which is another hot topic to discuss. So, when we talk about this section of the finance, we talk about capital budgeting that evaluates long term investments based on project cash flows and return metrics such as net present value NPV and internal rate of return IRR. For example, Microsoft rigorously applies these methods when considering multi-billion dollar cloud infrastructure projects, ensuring each investment aligns with strategic growth objectives, enhances competitive advantage, and contributes positively to shareholder returns over the long term. So, in the next slide, we will talk a little bit about sources of business financing. This is another important section, we should talk about sources of business financing. Enterprises access diverse funding mechanisms such as equity, debt, retained earnings, and government grants. Say, for example, Meta Platforms finances its metaverse ambitions through internal cash flows and capital markets, issuing bonds and equity when needed to maintain flexibility, supports R&D, and mitigates reliance on any single funding source, ensuring long-term solvency and innovation. We should also know what is the cost of the capital, why it is important to talk about the cost of the capital. So, this is very important that the cost of capital represents the average rate of a company must pay for using external and internal funds. It's vital for investment appraisal. Let's take an example of Alphabet Inc. that calculates its weighted average cost of capital (WACC) to determine whether acquisitions like Fitbit or capital intensive AI infrastructure investments will yield returns exceeding funding costs, thus preserving economic value and investor confidence. So then what about the dividend policy development, which is very important to talk, that we should know about the dividend policy development, how it works, how it functions actually. Dividend policy determines how profits are distributed to shareholders. Some firms follow a stable approach, while others are residual or growth focused. Say, for example, Coca Cola has historically adopted a consistent dividend policy, reinforcing investor confidence and signaling financial health. Such stability appeals to income oriented investors and reflects disciplined financial governance amid cyclical industry conditions and evolving consumer preferences. So we should know how that capital management works. Actually, it is very important to understand how it works. So working capital management is another important thing to discuss. Um, so let's discuss that in detail. Uh, Efficient working capital management ensures a firm can meet short-term obligations and sustain daily operations. It involves managing receivable, payables, cash, and inventories. Walmart is a good example. Walmart exemplifies mastery in this area by leveraging just-in-time inventory systems, strategic supplier terms, and advanced logistics to maintain strong liquidity, minimize holding costs, and enhance operational cash flow. So, do those companies they do mergers as well? So let's talk about it. Mergers and acquisitions. This is another important section of the finance study. Mergers and acquisitions (M&A) strategies enable corporate growth, diversification, and competitive advantage. Let's take an example of Disney. Disney's acquisition of 21st Century Fox is a prime example, expanding Disney's content portfolio and streaming potential. These complex transactions require rigorous valuation, cultural integration, and synergy realization analysis to ensure the ideal creates long-term shareholder value and aligns with overarching strategy goals. So let's conclude that all the sections related to finance, either it is the important role and the function of the finance in in the corporate sector, financial planning, and pro forma statements, or financial statements preparation and analysis, how they are prepared and how analysis is done. Then the time value of the money as of present would not be in future. So capital investment decisions, they are very important for the decision makers, for the policy makers, and sources of business financing is important to find, to explore, to invest in a nice way. And then cost of capital is a very important section of the finance studies. Then the dividend policy development we discuss is another important section, and the working capital management, that how companies work with like managing the capital, and mergers and acquisition is another important section. So let's finish this presentation here, and you're more than welcome to ask any questions if you have. Thank you.